Today is Monday, August 6th, and this is the ADM Investor Services Weekly Market Kickoff. Today's guests are Alan Bush, Senior Financial Economist here at ADMIS, and Steve Freed, Vice President of Grain Research. Alan, on Friday it was reported that U.S. non-farm payrolls in July increased 157,000, which compares to expectations of 190,000 new jobs. What is the outlook for the interest rate futures market now?
So even though that report was a little bit weaker than expected, it still looks like the Fed is on track to raise interest rates in September. And it also looks like the U.S. economy is still performing very well. So I would think that the credit markets will probably continue to work lower. At least the futures most likely will continue to decline. It was not that long ago, in fact, last week that we saw some 10-week lows in the bonds. So nothing has really changed with this report. The main trend for the interest rate futures market still appears to be lower.
What is the outlook for GDP for the rest of the year?
Well, second quarter GDP came in at 4.1%, and the third quarter GDP is likely to be relatively strong as well. The median estimates are somewhere around up 2.9% to 3%, but even the Atlanta Fed has their own expectation, and right now they are predicting 4.4% growth. So I'm thinking that might be a little bit on the high side, but in any event, I would expect strong third quarter GDP growth. My guess is somewhere above 3%.
And what is the outlook for the trade situation between the U.S. and China?
Well, I think Steve would agree with me on this, that it is likely to get worse before it gets better. But interestingly enough, U.S. equity markets appear to be holding up very well. And I'm thinking that they're probably looking towards something more positive down the road. Interest rates still are relatively low globally. And also we have our earnings reports coming in stronger than expected. So even though the trade situation is not likely to improve anytime soon, our financial futures markets, at least the stock indices, seem to be performing very well.
Steve, wheat futures are going higher. Why will this be sustained?
I think, yes, it will be sustained. I think we've seen a pretty impressive rally over the last month, and it's been led by lower wheat production numbers in Europe and Russia, maybe in Australia, and also maybe a little bit in Canada. So I think that we're just starting to try to get a handle on how much production is lost and what's that going to mean to global stocks-to-use ratios. And I think over the next 30 days, we're going to see some low numbers and probably see wheat prices continue to move higher.
And bean prices are slipping lower. Will this continue?
I think it will for two reasons. I think that on Friday, USDA's got a crop report, and I think they're going to show a bigger crop than they had in July, and I think that's going to equate to a bigger carryout. One private group says the carryout could be over 700 million bushels. That's probably something below $8 on the futures. And so with these, as Alan said, with this trade war getting probably worse instead of better, the number one things that they're earmarking China as far as tariffs against U.S. are soybeans. And so today there was one group in China that said they'll probably take 10 million tons total less beans next year globally than they did this year, which probably most of that will be out of the United States. And that's 360 million bushels of demand that we might lose.
And corn futures are 50% back from the sell-off from the May highs to the July lows. Will the market trade above this resistance level?
I think after harvest it will, because I think we've got enough crop problems out of the Black Sea, Brazil earlier, that we're going to see record corn export demand out of the United States. And I think most analysts are telling farmers to sell their beans and store their corn. And I think once they put the corn away, the demand, if it's going to be record high, is going to try to have to pull that out, and it's going to take higher futures to do that.
And you had mentioned that the USDA will release their August crop report on Friday. What is the market looking for?
They're looking for a little bit bigger corn and soybean crops than what they said in July. This is their first official where they go out in the fields, they take farmer surveys. Before it was always a guess. So we think for a little bit bigger corn and soybean crop numbers, a bigger bean carryout, maybe a corn carryout unchanged, and maybe a lower wheat carryout. So the trend of lower beans, higher corn and wheat will probably continue after the report.
Great. Please remember that the opinions expressed here today are solely the opinions of our guests and are not necessarily the opinions of Archer, Daniels Midland Company, or ADM Investor Services. If you have questions or comments or would like to know more about our services, please contact us at www.admis.com.